Hi, welcome to this video, which is on the 13th of October. It's Sunday. Just going to be looking at one of our favourite trades from a long-term trend following perspective, which is to trade the euro short. Now, in relation to trend trading the euro, we're going to be looking at the euro against the USD, also the euro against the JPY, and finally the euro against GBP. We'll go to the charts in a moment. Now, over the last few months, been very bearish of the euro. It has come down on the USD, but not too much volatility yet. But we think there's a long way to go on the downside. The euro JPY, been bearish of that for a good while. It's had a really good move to the downside, but it had a significant bounce on Friday to a key level of resistance. I think it's a great level to key off for shorts. And finally, euro GBP looks a really good downtrend now, and it's got far further to run. So from a long-term perspective, still plenty of downside in the euro. From our perspective, we're going to go and review the reasons why, round up the fundamentals and sentiment behind the charts, and also do our technical levels of entry, stop and target. So just before we do go to the charts, please do keep in mind it is my view as of right now. It can of course change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including the 3 we're going to look at right now, you can get live access to our member center on the link beneath this video. In terms of the first trade setup, it is going to be Euro USD daily chart. I'm not going to do the longer term monthly chart. I'm just going to give you the levels that we're looking for, which is 104.50, and then longer term a rundown to the par level. So basically 1,000 pips. That is longer term, okay? But the euro, it has come down. This chart, fairly low volatility, okay? Come and do my technical levels in a moment. But let's look at the fundamentals behind the chart, which we see as being bearish for the euro. Big picture, the really big fundamentals. Eurozone is going into recession. Germany is already there. All the economic data coming out points to the other nations joining it. Then you've got a central bank, the ECB, with negative rates, and they're also doing stimulus, printing money. They might even cut rates more negative or add the stimulus. It won't help the Eurozone economy. It failed before, as we've noted in previous videos. It will fail again. Eurozone faces a long and deep recession. So why the euro rally? Asked that a lot last week. It isn't much for a rally at all. If you look at it, it's about 135 pips from the low. I think, you're not going to get one-way traffic in a currency pair. The USD was generally a little bit overbought last week, and it was a shakeout of weak speculative long. So the euro just correcting oversold. Now, in terms of the USD from here on in, so to speak, a 25 basis point rate cut is factored in by the Fed this month. So, I think the Fed will probably cut rates, but that's no longer bearish. If you go and look at Fed Watch, it's basically discounted, so it's in the price. I think also the USD generally weakened due to US-China. They had a kind of trade truce. It's not a solution to tariffs at all. The two sides are a long way apart, but risk assets, risk currencies generally rallied on that truce. Okay, that's in the price as well. Did Brexit optimism boost the euro? The fact that there might be a deal? I don't think so, because I don't think the market, if you look at the way the euro's moved, really sold it off when the market didn't see big chances of a deal. I think that's news after the price. So just a short covering rally in our view. Very important, negative carry to hurt the euro, negative interest rates. The US has got some yield on it. So basically big institutions will sell euro rallies to get that yield, okay? Something to watch in relation to the euro, I did a video on the Turkish lira, is Turkish lira weakened at the back end of last week. There's the potential for a currency crisis, i.e. the Turkish lira to sell off hard like it did last year. If it does, it'll hurt the euro. Why? Because the Eurozone banks are heavily exposed to Turkish debt. And you'll notice in the last currency crisis last year, that really hurt the euro. I think it could potentially come again. You've got Turkey in Syria Trump in a difficult position, like I said in my Turkish lira video, that he's seen as deserting the Kurds, for want of a better word. Will he do economic sanctions on Turkey and obliterate their economy, as he said, if they go too far? Well, have they gone too far? We'll have to wait and see how Trump reacts. But that is something to watch next week. Now, in terms of we've been playing the year, we did set it off the 114 level. Got a really good entry, a little bit lucky. Came down, stopped ourselves out, and we got above the 20-day moving average. And yeah, we're looking really for the euro not to get too far away from this moving average. So stopped out as we came through it, came straight back in on that red. Did hold above it for a little while, but not really going away from it. No real volatility. Down, back, down. And we held the trade until we got to 110.60. We just let it come through the 20-day moving average and stop us out. So it was 111.80 to 110.60. So 120 pips. We did bank half into the lows and resold it into the 20, which gives us another 40 pips on both trades, so 160 pips. But yeah, it did take a while. But a positive for us is you picked up the carry. The carry interest is in your favour. And euro for us, no real upside. So it's kind of slow and steady to the downside, and rallies, in our view, are selling opportunities. This rally here proved to be one. That one there proved to be one. This one's similar magnitude, in our view, prove to be one. Went up, took our stop, okay, which was just below that level. I should have left it a little bit further back, but it doesn't matter. It just, no real volume to get higher through these 3 bodies and 2 tails there. I could have taken 4 bodies in, just below the 111 round number. We've just come back in at 110.40. Okay, so 20 pips basically below where we stopped ourselves out. When we got to the up towards the 6 level, it could have run on. Didn't run on, so we've come back in. Now got resistance at 111 behind this cluster of candles here. 111 is a round number, and I think that's where big institutions really hit the euro. So from our perspective, the euro is a sell. I'm not doing anything complicated technically here. I have put the stop a little way back, and I will add to this position if we rally. I'll show you how I'm going to do it. So we've got that as our stop behind this level. That's basically where we break down here. We try and get back up. Big blue forces, red rejects, down. So this is really strong resistance in our view, and that is where our stop is behind. Okay, so we're back in, and if we moved above 111, I would just sell back through 111. Just don't see much upside in the euro. Now, in terms of, if you wanted to be a little bit safer, you could wait for it to come back, draw trajectory in, through that 20-day moving average, back through the round number. Okay, so I'll just get the trajectory in. Just let her come back through the 20 and then sell. We've come in already. Don't see much upside. Not much volatility in this pair. At the moment, it's near historical lows. But 2 previous occasions where the euro's had as low a volatility as it's had now, it's suddenly broken to high volatility to the downside. And I just feel all the risks are to the downside in the euro. Not a lot of upside, plenty of downside. And you do have an okay carry on your side to pick up some interest as well. Euro USD, it's for us, obviously it has come down, but the volatility hasn't been that high. A couple of decent trades in it and some carry as well. We'll see how this one goes next week, but I've really got my eye on that Turkish lira, because that could really impact on the euro as it did last year. So we shall see. But now let's move on to a bit more of a faster moving trend, which is Euro JPY. Euro's had a really good bounce. I didn't think it would bounce as much as it has, but now it's come to a key level, key resistance level. Looks a great risk to reward short. Right, let's go and take a look at Euro JPY. Right, Euro USD monthly chart just very quickly. It's been one of our favorite trend following trades now for over a year, and it has moved down, yeah, quite nicely. And now we've got a little bit of a rally to the upside, but we're now at this or coming up to the 120 level. That is a big monthly resistance level. You can see why in terms of, yeah, we do reverse here, break up, okay, come down, test, reverse, one body holds, two bodies hold, three bodies holds, then you get the big red through, you get the blue up, back, blue pressing against level. So 120 is a massive level for Euro JPY. So it's nearly at the level. If it holds next week, then I think it's a great opportunity to go short of Euro JPY. Where are we going to go to? Our view longer term is down to 100. There is a little bit of support in between, of course, at 110. Just to 110. Keying off that 120 level and having a stop behind it, it looks, for us, a really good risk to reward trade. Now, what we will do is we'll go to the daily chart to draw some levels of entry, stop, and target. Right, Euro JPY, the daily chart. I should do my technicals in a moment, but first of all, let's have a look at the big fundamentals. We've seen the Euro fundamentals. What about the yen? Well, point number one, the yen will be firm or continue to be firm longer term as long as the global economy slows up. The global economy is slowing up. That slow up is pretty severe. It's not going to be turning around anytime soon, and the yen is the number one safe haven currency. So the yen should remain firm against that backdrop. Last week's risk on rally was minor. It was in relation to trade wars, the truce we noted earlier. It's not a long-term solution. Also, if trade wars were solved, it wouldn't turn around global growth. So, the rally is a selling opportunity in our view. Both central banks have stimulus and negative rates, but the ECB are likely to expand their stimulus in our view, maybe cut rates more negative, where the Bank of Japan, they're kind of at the limit of their stimulus. They've been doing it for years, so that would be bullish for the yen. Yen is oversold historically as well. So you've got a lot of ground to make up longer term on a lot of other currencies, euro being one of them. Now, over the last year or so, we've been just selling the euro short at any opportunity we could get. Did get a trade off this candle, a lucky one. And we're looking for the 20-day moving average to really hold rallies. It holds quite nicely. Then we got stopped out. We got about 400 pips off that trade. Then it rallied up to the 120 level. And I got the entry right, but I kind of messed up the last trade that I did. So what we do is just draw the 120 level in. Big reversal candle. Then we poke at the 120 level. There's no order flow for buys here. Come back, we'll just wait, we'll sell on the red. 119.60, tried to get back up, can't, down, down, down. But what I normally say is, like, when you've got a decent profit, when you're long-term trend following, let's say in this pair, really above, about 200 pips, you can always take half in, look to sell a rally or break lower. Now, see, I did that in Euro USD. On this occasion here, I didn't take my 50% when we were down here. I left my whole trade in. Bang, up she goes. I put the stop down to 109.40. So I got 20 pips where I could have had a few hundred. But that's just kind of the way it goes. In hindsight, I wish I had to take my profit. I didn't. But actually, it's back at 120. I think it's a great sell. Because again, just like here, you poke at the level and no more buyers. Or there don't appear to be any more buyers in the zone of the round number. Okay. Now, on the other side here, this big red, some massive volume candle Did a video on this. I called it definition candles, where they're really strong candles, and basically that candle featured heavy institutional order flow, adjusting portfolios to the global financial situation in terms of bond yields and so forth. I won't go into it in full detail here, but it'd be very tough to take that candle out. If that candle is taken out, it would negate our euro bearish stance for now, for sure. I just don't think it's going to get taken out. Now, what would I do? If I wasn't in, I would just sell a lower open, let's say 119.60, or if we do get through the number, I wouldn't rule out we could get through the number. Just draw that level across there. That's the top of the definition candle. So if we go through 111, I'd look for the rally to fade, and you could sell through 119.80. Okay, so just on a weaker open, or if she does go up, just sell back through the round number. Not doing anything complicated technically here. Your stop should be behind that cluster of candles there, in my view. It's 121.30 our stop is at. I think the cluster is 121.11. Okay, so yeah, I'm not doing anything complicated in terms of the entry here. Just feel, yeah, any weakness at all at the open is a good sell, and then obviously a rally above the 120 level, sell back through it. You could, if you're being more conservative, I'm being quite aggressive in terms of the way I view the fundamentals and sentiment, you could do that. Such as draw trajectory in there, come through the two bodies, that 20-day moving average will sneak up, so snap of that level, the 20-day moving average. For me, I'm going to go for the more aggressive entry. Still a long way to go to the downside in this one. You saw it from the monthly chart, down towards 110, then the power level. A bit disappointed in my last trade in this one that I kind of managed to end up with not very much at all, where I could have taken my half off and so forth, but hindsight is a wonderful thing. But yeah, level we're at now looks a great selling opportunity to us. All right, let's go to our last pair, which is going to be Euro GBP. Euro GBP last chart, I'm just going to use a chart from my member center for this one. And in terms of this one, got really nice trades in it since it peaked out. It came up here and actually felt that was going to be the high, this big blue, and I sold the red, got taken out. I took quite a big loss there, actually. I put quite a bit on the trade. But yeah, sometimes, yeah, a lot of traders would disappear from a trade if they take a reasonable loss, don't want to touch it again. But well, I'm all for having a few goes if my view remains intact, and got it back through 91.80 at a really nice move to the downside. I let it come through the 20-day moving average, and I put my stop behind these two candles here, the blue and the big rejection. Got taken out. It's a couple of 100 pips. Bash against the level, and I really like it when this happens. Yeah, if it happens in Euro JPY, it would be a good setup. Euro GBP, it worked. It comes above the 90 level, stick the stop at 89.80, exactly the same level as I got stopped out at. Red down, another red follows through. So two really nice big days to the downside. Now I do think we're going down to 85, so that's here. But I think we're going down to 80, which is right down here. Okay. So from the perspective of trading this from a fresh position, if we come back towards this 88 level, I would sell. I'll probably put a small one in if I was bearish anyway, and look to sell any rally and add in, just in case we have another run on to the downside. Yeah, a lot of traders will just wait for the pullback, and sometimes if you do that, you're just going to miss the trade. So if you're bearish, get one in, even if it's small. You've always got the facility to add. I'll just show you the monthly chart. You can see it. There's the reversal. There's the first level of support there in our view. But I don't see any reason why we can't move back down to this zone here. You know, the 80 level, maybe even lower. So for us, yeah, plenty of downside potential. So they're the three pairs. So I do feel the euro has got more downside. Yeah, from a long-term trend following perspective, we remain very bearish and shorting the euro. And yeah, coming months, I'm looking for the euro to work its way a lot lower. And I think yeah, when you're doing long-term trend following like this, the individual trades don't matter so much. It's part of a sequence, so to speak. But I'm still a bit annoyed that I messed up that euro JPY last trade. But hey, that's the way it goes. So anyway, that is the video for today. Thank you very much for watching me. As per usual, take care and have a good day.